City streets passing by underneath stormy skies. Neon signs in the night, red and blue city lights. Could be tomorrow, but then could be 2010.
Good afternoon. Good afternoon, everyone. Hope you had a great week. This is going to be our last trade. I hope we don't bogey the last hole, but in the week for what we were doing here, we did a few things, and it wasn't the smoothest of rides, but it was still a pretty good ride. We weren't in the market as much as you may have thought. But we're not going to let this, go into the ground. We're not. You can see this last position and its last. We're letting it run, and so it's much more volatile than we would if it was the beginning of the week and we didn't have some wood in the trade. There are some times, we were discussing with one of our members, Darian, we equate a lot of this to sports, right? 'Cause it's kind of sports minded. Um, whether it be golf or football, you're the coach. It's going to be your bread. It's going to be your time. You're going to be playing the market and you get your opportunity to make some of those decisions, when we're up, when we're, you know, have the game in hand. It is Friday. We are wrapping up. We're guaranteed to have a profitable week. And so we're letting it run, so to speak, right? And now we may not do that. We won't do this at the beginning of the week, right? We won't. We'll play it nice and tight, try to get some points on the board, get us some distance between us and the bad guys, and or bad outcome. Not really personalizing it, and kind of nurse things along. I hope that makes sense. If you play some sports, I think it might. We do the same thing out on the golf course. And we're only going to be here for about 40 minutes or so, 45 minutes. We're kind of crunched. We got a lot we got to do. And um, and so I just wanted to be here to answer any questions, give you a glimpse. I know the market is up and, everyone kind of looks at it, just what's happening the here and now. We're still on a daily basis, we're still expecting this market to come in and to come in hard. I know, it doesn't look that way right here, right now. We're not trading intraday based on that, but on a position basis, based with our options, we most certainly are. Now, we'll either get it right or we'll get it wrong. We won't lose all of our premium. These are defined risk options, but we have a calculated bet going out to the end of November now, actually beginning of December. And we are playing the dark side. We most certainly are. Why are we doing that? Why? Because we have on a daily basis, in fact, I can show you, I'll try to. One of the reasons is let's take a look at the VIX. So on a daily basis, the VIX is at 80. Nobody's paying attention. And they're going the wrong way, like the planes, trains, automobiles. So when I see that, right, and that's the trend, and the market isn't seeing it. So let's go to the ES, and I'm talking about the futures market. Let's put it on a daily. It's at 50. So it's seeing a little of it, but the market should be down here someplace. Now, I think it's headed there. It's either the VIX is going to come in over the next few days and I'll have it wrong and the market will run up and then I'll have to reposition. But I don't think I have it wrong because I got the VIX at 80. I got the market asleep. And we also have some other tools that we can look at, namely the skew. And the skew is extremely high. What does the skew tell us? The skew tells us where and how the big moneyed interest, the smart money, how they're positioning. And what are they doing? They are selling calls to the specs, the speculators who are going to get left holding the bag holders, and they are buying puts. And they are buying puts. So that drives the skew up. So that gives us the confidence, and we consider this to be a false high. Now, I didn't expect that we are going to get a gap up. In fact, we're really thinking that we're going to get a gap down. I still think this is a gift. I think it's a gift if you wanted to be selling the market. We'll see where it closes. The closes on a given day are much more important than the intraday traffic of where we are at noon or where we are at the open. Because behind the machinery that runs the markets are people, and where they are prepared to leave their machines and their positions when their head hits the pillow on any given night is important versus the middle of the day. It's also true at the end of a week. How do they want to go into this weekend? So I don't know yet. Now, unfortunately, we're going to have to tune off at about 12:40 or so, 12:45 today. But if the market does sell down this afternoon, I wouldn't be surprised. And I want you to know if it does, Swing Machine will catch it right on the screws. I don't know if you'll catch it, but our members will, if they're even trading on Fridays. So let's put this back before I forget. And I'm happy to answer any questions. And we talk to all kinds of traders every day from all over the world, all doing different things. And we do different things. Excuse me. Heard a little frog there. We are diversified in what we can do. We're not trying to be diversified necessarily, just that alone. People talk about diversification just in terms of what they hold, I guess, or the Kramers of the world. Jim Cramer, who's a gamer. Um, let's get this up here. We want to be diversified in what we can do. I was asked a very good question. I was talking to a nice gentleman from Ontario. I'll keep his private. His name is Vince. Vince may even be here. He said, Don, I got a question for you. You got 70 programs that I read and growing too. We'll have even more because this is over time. Why do you have so many? Why if you've got the Holy Grail, if you've got the Holy Grail and you got one or two, why do you keep making more programs? He didn't use the word Holy Grail, but that may be what he may have been thinking, maybe what you're thinking. Let me explain. One, first person to say, there is no Holy Grail. There isn't. Wait, I take it back. There is a Holy Grail, but we don't have it. The Holy Grail is you. It is you. We have decision-making trading tools, and we say that these tools are trade to assist your trading. Robot assisted assisted trading. I borrow that phrase, I borrow that word from my surgery background. There's a company called Intuitive Surgical. You can look them up. Symbol ISRG. They sell multi-million-dollar surgical robots. Hospitals will build an entire wing around this. You may see the billboards up on the highway. Come to our hospital, surgical robot. I have sat in that surgical robot. It's like a cockpit. I've sat in it. I've operated it, but I wasn't operating on a patient. I was picking up little blocks like a little kid in a playground, like in a sandbox. It was really cool. And it's really, really good. But I can't operate on a patient because I'm not a surgeon. You must be a surgeon that is trained and very, very good surgeon to boot, but then specially trained to run the robot. They have a team of people actually. These trading robots we have are not here and we are not promoting them in any shape or form that you're going to be able to jump the shark, that you're not going to have to learn, you're not going to have to become a trader, you're not going to have to put in the time. You can just, subscribe or buy one program, which you can't, and just plug it in and automatically print you money. No, that would be the wrong takeaway. You're going to have to learn. You're going to have to get acquired trading skill, and you're going to have to do it constantly. We do too. Susan and I have to do it every day, every week. Yep. But we enjoy it, right? And I absolutely love it. Susan likes it. She likes it, but she's got other stuff she likes to do too. So I do too, but I love it. It's a sport to me. Somehow or another, it's just I share it with you. I don't, you can equate it to whatever it is you want. I didn't want to equate trading to something not fun. So I really enjoy sports. I really enjoy golf, but I enjoy sports in general. So I equate it to sports because it's like that. It's a sporting event, the way that we approach this. But you could equate it to whatever other endeavor that you really, really like to do. I think it should be something you really, really like to do, though, because could be some frustrations, and if you don't really, really like to go like play golf and you go out there and you get frustrated and you throw your clubs into the trees, you're probably not gonna, it's probably not a good idea. Um, so I didn't answer the question. I digress. Why so many tools? Well, a couple of things. One, all the programs that we have now, 70, not all of them come from us. Many of them come from us, Susan and I, but they don't all come from us. Many of them um, come from members, annual members who have been with us for years, and they ask for this, they ask for that, they tweak this, they tweak that. Some of it's totally new, and so it keeps growing. It keeps growing, and because there's no singular holy grail, um, we want to have a basket. Maybe you might think of it this way: you're a coach of a football team. You got a great quarterback. I mean, are you going to just, run quarterback sneak day after day after day, quarterback sneak, a few yards. Maybe, maybe you want to throw a pass. Maybe you want to have them run an option play. Maybe you want to have them run a screen play. Maybe you want to run because the market is doing different things at different times. You may notice like in the middle part of the day, it kind of goes dormy. At the beginning of the day, it gets really volatile. If you're trading oil at 10:30 on every Wednesday, it's really volatile up and down. Well, there are certain programs that you can run if you know that you can take advantage of it. The market gets real quiet overnight. There are programs that you can run overnight that can do fairly well. I say fairly well, as the markets are thin, but there are programs and markets that you don't want to trade overnight, like nat gas, very skinny, very thin, very manipulative, and you don't want to do that sort of thing. That is the sort of thing or the acquired skill set that you need to learn. Another analogy might be, the flight controls on an airplane. You might have the money. You might have the several hundred thousand to go out and buy yourself a small airplane. JFK Jr. did, right? Get up there and fly that plane around. And, but he just made one big ass mistake, right? He took off on a late summer's evening from Peterborough Airport outside New York and decided to fly out to a wedding out on off of Cape Cod. Well, anyone who's spent time out on the Cape, and I have, I was actually a policeman for the Hyannis Police Department. You know that? When I was in college, right out of during college and then right out of college. And then I said, nah, that's enough of that. It's like a little varied background. But part of the reason was I wasn't there just because for the police department. Susan lived on the Cape, and I met Susie in college, and I'm like, aha, I'm not too dumb. I think I'm going to stay on the Cape, get myself a job there, and chase this little blonde around Cape Cod. That's what I did. I'm still chasing her around. JFK made a decision to fly off the Cape. In the summertime, the ocean will be cooler than the air. and it can create a fog. Like it's like kind of like San Francisco, a fog, a haze, not really a fog, but a haze. And when he got offshore, he lost his ability to see the horizon and he couldn't see where he came from. Oh, just, you know what that means. He's now got vertigo. He can't tell up from down, down from up. And he's got two passengers, and they may not be comfortable. They may be nervous, and he's nervous. And he doesn't know how to read his instruments, and he can't trust his instruments because he hasn't been trained. And what does he do? He starts listening to that little inner ear telling him that he is doing whatever. I'm not a pilot. And he steers the plane right into the ocean at about 300 miles an hour and kills himself. Trading robotically, trading like this, you need time. We need to show you some things. We need to show you some things that you don't yet know, which is the first stage of learning anything. Now, of course, younger people today, they know, yeah, not everybody, not our members, but most of them, they already know everything. So they got nothing to learn. They're going to learn it the hard way. But that is the first step of learning anything, is acknowledging it's not a weakness to say, I don't know. There's a lot of crap I don't know. In fact, I'm going to arm wrestle you for the right to be the most ignorant person here today and in the market. I am not the smartest person. I'm not, especially in this market. And I will arm wrestle you. I want to be able to move left or right. I want to be able to react. And if I have a preconceived notion that I'm the smartest guy here, or the smarter than the market, or whatever, it's going to just get me in trouble. So that also has to be learned. During the Q school, we're going to try to make you aware and aware and aware of that, and also show you some of the programs and get some of the programs to you so that you can begin working and honing on that. Um, this is learn to trade your game, though, not mine, not Susan's. We're not making any claims. I'm not managing your money. So I'm not soliciting money to manage. I'm not. I'm not giving out specific recommendations to buy or sell anything. I'm not. You're on a delay. You shouldn't be trying to take anything from here. This is just an educational opportunity, a chance for you to ask questions and a reason to maybe go visit the site. Um, it is going to be, the motto is learn to trade your game, your game. And I just think that if when I go out to play golf, I want to hit the golf shots. I don't want to, some guy riding beside me to hit the golf shots. I want to play. I've earned that right? I don't need some guy in a big tall building, who, works 2 or 3 hours a day to come out with me and hit the golf shots, right? A book or a broker. Um, if you have one of those and you trust him and he's done a good job for you, maybe you keep him, but maybe with a portion of your money, you attempt to do what you can do, and maybe you could use these tools to look over his shoulder, make sure he's doing the right thing for you as an idea. But what Kennedy did, he just he overestimated his abilities. He was in a high performance aircraft and he just overestimated what he could do. TradeStation is a high performance aircraft. The market is high performance. You are trading. When you're looking at what you're looking at, you've got to stop and think about this. There are grown men and women in New York, in Chicago, in Singapore, in London, wherever they are, and they're trying to do right by themselves. You may be trading a micro, you might be trading a mini, they might be trading 100 minis or 1,000 of them on one market day in and day out. You're in the same place. And if you think you're going to just come in and just bounce around, buy and sell, sell and buy, with no discipline. You're just going to take the plane up and fly it around because you can afford to do it. Good luck with that. Let me know how that makes out. How you make out. Um, it's not gonna work. Sorry to say. So our members work very, very hard at this. They do. The the Q School, it's 3+ weeks, is a mentorship to show you what's possible, to peel back the onion, so to speak. You may or may not be really proficient at the end. It depends. Everyone comes in at different places. Um, but it's a mentorship. It is not, we're available for questions down the road. If, a program isn't quite doing this or something, you got a question, we're going to be available, but we're not going to be available to, you need to run this programming and the settings need to be this and need to be that. It is not an apprenticeship. You understand the difference? An apprenticeship, you get to, sit beside the plumber in the plumber's truck and go around and work with the plumber for 3 or 4 years, side by side, day after day, job after job after job. We're not going to be doing that. Unfortunately, I don't have the time. I don't have that luxury. Susie and I are trading for Susie and I. So we're doing our own trading. We're not set up to do that anyways. And we want you, or you want you to be doing your own trading. So it's a mentorship, but not an apprenticeship. So please understand that. We did get a nasty note from somebody, kind of chuckled, but it actually did what it was supposed to do. And that he wrote a note and said something to the effect, we get him every once in a while, and he'll say, what the hell are you doing all these YouTube videos for? You don't make any claims. You could tell his tone, because you don't make any claims. You don't make any suggestions to buy or sell anything. Why the hell you do the YouTube videos wrong? Why the hell should I ever subscribe? He actually did. Perfect. He moved along. What he didn't recognize was that he was actually going to have to do something. He wasn't going to be just a beanbag. He was actually going to have to learn something. That guy's never going to learn, and that's fine, right? We need those people in this market. So doesn't Wall Street and Madison Avenue. That's how they get to separate people from their money. That's what they do. That's what they're here to do, despite everything they tell you. We talked of faux or fake media long before Trump. We used to call it faux media. The financial media is the worst. I mean, or the best at it, whatever your perspective is. I consider them the worst of the worst. I used to call, CNBC the Contrarian News Bubble Channel. That was in the early 2000s. It got videos all the way back to that. It used to bother me. Doesn't bother me at all. I just get rid of it. You don't even need it. When you're trading intraday, you're trading intraday. None of that matters. Quite frankly, even inside of 30, 45 days, none of that matters. The only time might consider a bit of a fundamental view is if we are going to make an investment that goes out more than a year or more, then we, yes, have some fundamental criteria that we want to consider, and then we also use the technicals. But otherwise, it's just the trade and it's all technical. Options is completely math, completely, and we might look at a chart afterwards. I was discussing with Vince earlier today from Ontario that I think the mistake that people make with options is they look at a chart first and then put on the option trade. You got to look at the math first, and then if you want to look at a chart, you could. I hope that makes sense. So kind of rambling on here. We're letting this trade kind of run its course here. I think we're going to be in good shape, and hopefully don't finish with a bogey. If there's any questions, I don't want to just ramble on, but uh, we're really getting some really great phone calls and great communication from folks that are really stopping and thinking about, like, what in the world are we doing? What have I been doing? I didn't even know, like, a lot of people, it's kind of shocking to me. It's like, I didn't even know you could do this. Well, you can't do it at some brokerages. They'll never let you do it. You can't even do it in some countries. They're not as free as we think. Hopefully that's not ever going to be the case here. I hope not. I don't think so. And so we are extracting our job here each and every day. We provide liquidity to this market. We're here to extract cash flow. We're taking the risk. It's controlled risk. It's managed risk, and we're going to get paid for doing it. Makes sense? If you got any questions, I'll let you digest it. And so I don't ramble on, but we only got about maybe another 15, 16 minutes or so, and then we got to turn down. Hopefully we can finish on this good note and you'll see it. I've tried to promise. During the summer, it's is easier. We tried to do like Monday, Wednesday, Friday. This time of the year, really difficult to do because we're so busy with Q schools. We're so busy with our own trading as well. It's busy. It's hard to get in here and to get on YouTube and create some awareness. But be sure to visit the site. You're welcome to call. I'll be in the office. I'm in the office every Saturday morning. I really look forward to it. It's a chance to like, okay, now I got to get caught up, and and I love doing it with our own trades. I want to review some scorecards that folks had sent us, members, and get some more programs out to people. So if you're hearing me, please know that's going to be happening. And then at about noon, weather permitting, I'll be golfing and off, and then I'll be back in, Sunday afternoon, and we get to do it again. Beautiful, great life. I don't need a storefront. I don't have a boss. I don't have employees. Don't have a lot of paperwork. Got a little bit of paperwork, but not too much. And we share that with you. And I can do it from any place in the world that I want to do it. You could too. Great. The only maybe downside a little bit, the only downside is you're probably, I don't want to sound inconsistent on this. You don't have to be, we're not news driven, but because we're doing what we're doing in a live environment day in and day out, you're probably going to be a little bit more aware of the world than most people. And that because of, things that are going on in the world, sometimes not really the best, it can be a little bit of a, drag that way. Um, but we are aware. We're not trading off of it per se, but it's kind of hard. You can't. We see it on our news feeds and our data feeds and so forth. So a little unavoidable. That's maybe the only downside. Can be a little frustrating if you think about it too much. I try not to too much. Now, at this hour of the day, the margin requirements have gone up as the volatility in the Nasdaq, so particularly the Nasdaq, the margin requirements have gone up. And so at this hour of the day, the intraday margin requirement is about 2,400. Um, Outside of those hours, the original margin necessary is 24 grand. So it's quite large. But a person also needs to decide before they sit down to do any of this to define the things that they can define. You can't control the market. It's going to do whatever it's going to do whenever it's going to do it. But there are things that you can control. And once again, we come back to the Q school. We're constantly making you aware of those things. You want to know what those things are. And we're going to make you think about them and for the better and consider because you're going to define them, not me, but we got to make you aware of what they are. So you're not just, flying into your office at any given time and like, you know what, I got an hour or two. I'm going to get in there and buy a contract. I'm going to get in there and sell a contract. I just heard this lady say something about Apple on CNBC. I'm going to buy myself 1,000 shares. That's not trading. I don't know what that is. Hopefully you're not doing that. I heard some guy or I read something on whatever. I'm going to get me a call contract. I'm going to get me a beer. Remember Pocahontas saying that? Senator Warren. I mean, get me a beer. She's real authentic. But in any case, don't get me started. Ugh, we got when I'd like to think that's going to be all over in 35 days, but I don't think I don't think so. I think it could be even just getting started. Ugh. But any case, we won't go there. Any questions, let us know. And so there is a program on that. Um, so we're going to see if we can punch this out right in full view, and then we'll be done. We have a gentleman that this was his first week. I still consider him in Q school. It's his first week kind of on his own. We'll have to make sure that we mark it private, but he sent us his scorecard. Um, Alex for the week. He did great. Did great. Alex, if you're listening, did great. Looks really, really good. And the other thing is that I won't intrude, right? So we have quite a few members, but I'm not going to intrude. I'm not going to be, I mean, you don't work for me. We're providing a mentorship. We're providing you some tools. We hope we can provide you a valuable perspective, some valuable tools to save you time, to be more productive. But I'm not going to be calling and like, so how was your trading this week? And what are you doing? I'm not going to do that. I want everyone to do really well. Um, but if you reach out and send us a scorecard, you can do it weekly. Reach out anytime. I'm gonna respond, of course, right? But I don't want to intrude, because people, you may not golf every single day. You're doing other things, right? So we don't do that. I don't believe that you should. There's some people that say eat, breathe, trade, eat, breathe, trade. I don't think so. Um, I'm here all the time because I want to be, and we're doing other things, but I'm not in the market as much as you might think. And but one of the biggest challenges is we were discussing this with Darian earlier today, and Darian's gearing up to go into Q. Um, is quitting early. Is finding something else to do. Some people sit down and they think, they come out of a job where they've been going to the office and getting there at 8 o'clock in the morning and getting a coffee and stay until 4:30. And so because the market opens at 9:30, they sit down in their office at 8 o'clock and they're going to be there until 4 o'clock. No, no, you shouldn't be. I don't think you should be doing that. No, nope. Nope. Yeah, you got to learn to get the job done as early as possible and get the hell on out. So that one of the biggest challenges is going to have to find something else to do. Um, because you just don't need to do that much time. And we have members where, they're recording their profit factor, but they're actually recording, the time in the market. It's a bit of a game. They'll say to me like, well, Don, I was only in the market like for 16 minutes today. Something ridiculous, which is great, right? Um, you know, you don't want to time in the market is a risk factor. It's a little bit difficult for us to quantify. We can back test that. The programs will spit out what is the average time in the market, right? TradeStation is very, very powerful, and so we can run these models and we can see not you may look at it like do I make money or do I not make money? But it'll tell us all kinds of things. What type of profit factor we should have. What is the average run up? What is the average rundown? What is the average loss, the average winner? But it also tell us the average time in market, average time for a winning trade, average time in a losing trade. So if you're running a program, you kind of like to maybe know that a little bit. So if it tells you that over the last two previous months, the average time is 20 minutes and 45 minutes you're still sitting on the trade, maybe it isn't going to work out. Maybe you want to intervene type thing. Does that make sense? The models. I'm reminded of it. In fact, I want to make a video of it, but I don't want to get a copyright infringement. But I like to listen in Tampa Bay. We got a guy by the name of Dennis Phillips. He's a meteorologist, and he was talking about the models, for the weather. We got a big ass rainstorm headed our way, and hopefully that's all it's going to be. But he was talking about that the European model has new coding, and it's taking all the data of the last 80 years, and what is it doing? It's matching up the data available in the current storm system and applying it using AI to past models, and then it'll make a decision on what the thing is likely to do. Well, we've been doing that for 20 years here, but the thing of it is, kids, they've been doing this since the 70s and 80s. You've been buying and selling stock based on bullshit. Sorry, it's bullshit. They just feed you. It's how they sell soap. Madison Avenue and Wall Street are one and the same in the one. That's what they do. Because see, they've got it figured out. I don't know if you know this or not, but this trade's going against us a little bit, so maybe we finish with a bogey. We'll see. Um, the way our minds work as humans, we remember stories. That's how we remember stuff. If I told you, I can't even think of an example, but if I told you some obscure fact, and I used to have a story about the king and the queen, but if I if I told you some obscure story and I just said, oh, I'll use the king and the queen. Um, the king of, I don't know, the king of some kingdom, killed his nephew. And I just told you that. And in 2 weeks, I asked you who killed who. You might remember it, you may not. But if I tell you that the king had to go out and fight some other kingdom, and while he was away, he asked his young nephew, who was like 25 years old, to keep an eye on the queen. And while he was in battle, the nephew had his way with the king's queen. And when the king got back, he was not too pleased with the nephew, and he ordered his henchmen to take off his head. In 2 weeks, I'm going to ask you, who did the king kill, and why? And you'll remember. They tell you stories. They want you to remember them. Them, not just the story, but, you know, why you bought Apple, why you bought this, why you bought that. Mostly buying. Notice you're always buying. Who's doing if you're only supposed to buy, who the hell's doing all the selling? That was one of the first questions asked. I'm like, wait a minute, Susie, we're not supposed to sell? We're only supposed to buy. Well, who the hell's doing all the selling today? So we don't trade the stories. If the stories are in the market, they're embedded in the market. We assume that they're all known to all the participants, all of them. They may be real stories, they may be false stories, they may be whatever. We just presume that whether a person has a little bit of money a lot of money, an inordinate amount of money, that they're going to act in their own self-interest to protect that money or to grow that money. And if we can track their money flow, their footprints, and follow that for a little bit in a measured way, then and extract cash flow over a period of time, then we're going to do just fine. So that's basically what we're doing. Now I'm letting this one run a little bit more than I would on a Monday, right? And you may be looking and saying, Jesus, I couldn't, and maybe you are saying, I couldn't afford a $1,600 draw. Well, you got to remember, we're up 5,000 from where we started from. So I have wood in the trade, so I'm being a little bit more flexible here. But also, too, this is a mini contract. If that's too big, you do have micros, which are 1/10 the size. So you wouldn't be up 5,000 for the week. You would be up 500. That trade wouldn't be down 1,400. It would be down 145 in relative terms. On the other side of the coin, you might be looking at this, and we have members that do. They're in a different place in life. They've been much more successful than me doing other things to their credit. And they might be saying, well, that's just too little. How ridiculous. Don does all this time for, 5,000, you know, maybe they got 10 contracts on. Maybe they're doing it for 50,000. And maybe they're not having a dry down of 1,400, they're having a dry down of 14,000, right? But what they're not doing, what they shouldn't be doing, hopefully, is making a decision purely on the money. We do glance at the scorecard as a golfer might glance at the standings, but we're not super focused on each individual trade, as nor should a professional golfer be super focused on the score on each individual shot. He's got other things in his mind. Hopefully nothing on his mind. I hope that makes sense. Folks, we're going to have to turn down in a minute. I wound up talking. I'm going to ask you why the king killed the nephew in about 2 weeks. You'll remember. You probably won't be able to forget. But that's how they sell soap. And these commercials, some of them, they even like tell stories. They're connected, reconnected with each other, and they tell us stories. The politicians tell us stories. They all tell us stories. It's mostly bullshit. But when it comes to their money, though, um, I almost considered, we equated the radar to swing machine in golf. We made it fun, but I almost was going to call it like a polygraph machine, because it doesn't lie. The market right now is being bought. I mean, you can see it. And we're going to need to wrap up. I want to thank you. I want to thank you for stopping by. We'll try to let you know how this plays out. I'm going to let it run here a little bit further. If the market turns down, we will see it. Our members will see it. Hopefully they've already made all their money, and they're probably even done. Hopefully they're out on the golf course doing something else. And I hope you're getting it done with whatever it is you're doing. If you are, just keep doing it. Just keep doing it. If you're not, you might want to stop. You might want to look. You might want to think things through. Visit some of our videos. But, I don't see anyone doing what we're doing. I see everyone else doing what everyone else does. The same shit. I'm sorry. The same economic discussions, inflation, deflation, quad one, quad two, all this crap. And I don't know, I don't even understand what they're doing, because they're like trying to cut steak with a butter knife. I mean, we are trading surgically. A little bit sloppy here this morning on this one, but we've already described where we are. So, but I'm not trying to prove an outcome, not trying to prove anything. Hopefully we will get you off to this a good start, and during your Q school, you get to prove it for yourself. And I very well may just close this right here and now, and we will finish with a double bogey, but we can do that. Let me just see where we're at here. Give it another minute or two. Not much. Yeah, it's 12:45 and I got an appointment. So we're gonna we'll have to update you. And when we connect next week, I'll let you know where this trade actually finished, but we're not going to give much more back. I wish you the best. Have a great weekend. Thanks for stopping by, and feel free to reach out.